KAMAT Hotels' latest earnings were straight up horrible. Okay, here we have the earnings in millions of rupees, so we'll convert this into INR. So, in quarter two fiscal year 2026, the company reported a revenue of 751 million rupees or 75.1 crores, which is an 11% decline, 11.8% decline compared to quarter two fiscal year 2025's revenue of 85.4 crores. EBITDA declined by 62.5% from 22.4 crores 12 months back quarter to this quarter 8.4 crores or 84 million rupees, and profit after tax went from 8.3 crores of profit in quarter 2 fiscal year 2025 to minus 2.2 crores in fiscal year 2026 second quarter. So basically horrible results. Okay, but interestingly, if you look at the ARR, the average room rate, meaning like per room which was used by a user, how much did they charge? Like, yeah, how much did they charge? If you look at the ARR average room rate, look at this for the Orchid brand. For the Orchid brand, it was 5,979 rupees. 7% growth actually year on year. The IRA brand 4,749 rupees. Okay, 4% decline. But Lotus brand 5,331. Fort Jadavgarh 0%, 8,286 rupees. Actually, a slight decline. But you can see the average room rate has actually not declined that much or even declined at all. However, the occupancy rate, meaning the percentage of the rooms which were actually occupied in the quarter, fell massively from only see 66% of Orchid hotels were occupied in quarter two fiscal year 2025. Now only 47 of the Orchid rooms were occupied in quarter two fiscal year 2026. Massive decline. Same for IRA from 77% occupancy rate to 65%. Lotus fell to only 38% of rooms actually being occupied by some customer in quarter two fiscal year 2026. So the number of rooms actually being utilized fell dramatically, which led to, again, these horrible, horrible results. From profit straight up to loss. So what happened? Management has given the reasons. Okay, here are some, this is the company's latest con call transcript. Here, the management is talking to the company's shareholders and investors and is explaining these words are from the management who's explaining what happened. Okay, so let us first, I will share with you all the reasons that basically we have had this quarter has not been very good. Basically, on the consolidated level, particularly our subsidiary companies, one is Envotel, which has the Shimla and Manali hotel, that basically due to road washing away and the delayed time because the devastation was very high. So this quarter monsoons, this year monsoons were early and monsoons were a lot. So in one of the subsidiary companies that is Envotel, Envotel has Shimla and Manali hotels. So what happened? A lot of rains, road washing. Roads were kind of blocked. The hilly roads were blocked. A lot of debris and all of that was there. Okay. There was delayed time, roads were blocked, people couldn't really enter the hotels, a lot of delayed time because you have to then clean the roads away. A lot of devastation was there, people were not going. So the Envotel hotel was affected. Okay, continue. So the delayed time that it took for the roads to be made again, a full quarter was washed out in the case of Envotel hotel, where it affected both revenue and expenses because expenses we could not reduce. Okay, so the entire time that it took for the roads to be remade, the entire quarter for the Envotel hotel, which was Shimla and Manali, the entirety for the full quarter, the hotel was washed out. We could not make money. However, they could not make revenue, but their expenses were still there. You have to pay employees, you have to maintain the hotel, right? You have to pay electricity, heating, all of that you have to maintain. So basically, you could not get revenue because again, roads are gone. The roads are literally gone, but the expenses you could not reduce. Continuing, though we have afterwards got subsequently a 2 month waiver from the Manali owner in which rent was waived for 2 months. Okay, so the Manali owner did not take rent for 2 months or reduce rents for 2 months. Basically, but still, it is still having a cost which we had. That is one of the reasons. So one reasons the rain caused massive impact on their end hotel, that is the Shimla and Manali one. Expenses were there, revenue were not there. Next reason, the second other reason is that even Chandigarh, the another subsidiary, which is there, since it is a new hotel and the expenses which are there, it is in loss, which basically will get turned in the coming year. It's starting as a general practice, which we have mentioned before also. All new hotels which we open, we book the expenses, we don't capitalize the expenses. Okay. Second reason is the Chandigarh hotels, and basically they're new hotels. The newer hotels which they opened recently, they are currently in a loss. Now, they are not loss on an operational level. Basically, the rooms are profitable. Operating the hotel is profitable. However, the initial setting up expenses of the hotel, that is what is causing them to be technically in loss. Here he has mentioned that all the losses, sorry, all the expenses, the initial expenses, we book the expenses, we don't capitalize the expenses. Now, what does this mean? Basically, capitalizing is very simplistic, could be even wrong, very simplistic explanation. You have an expense. Let us say you open a new hotel and you're opening a new hotel. A lot of investments and expenses have to be made to make the expenses. Capitalizing means you are spreading it over some specific period of time, right? You have, let's say, 100 units of expenses. Then in this quarter, you will book 20. Next quarter, you will book 20. Next quarter of that, you will book 20, and so onwards. Even though all the expenses took place in, let's say, this quarter, and 100 units were spent in this, but we are capitalizing them. We are spreading them out over a definite period of time. But that definite period of time is not arbitrary. It has to be according to something, right? Some period. Why was that period chosen? That has to be definite. But they don't do that. They don't capitalize the expenses. They're not spreading out the expenses. All the expenses incurred in opening the new hotels, and the expenses are actually not that high. They have said here. They said here, right? So all the expenses that they took in initially opening the hotels, the upfront investments and all of that, they have booked it for this quarter only. So again, revenues are down, but expenses are still there. Expenses to maintain hotels, like in the Shimla and Manali, plus the new hotels are in loss because upfront investment is required. Okay, continuing to read, and this is true with the hotels which have opened up new also. And this is the case of Chandigarh and these new five hotels which we have opened. But considering that in quarter three and quarter four, Chandigarh has already started going well. Like currently we are in quarter three, so Chandigarh is already doing well. We will have a turn in our new hotels also, which will be there. There will also offset their operating expenses, the opening expenses and losses, and the Chandigarh also in the same manner. Okay, he's saying a term has been used. We will have a turn in our new hotels also. So I'm thinking that means as time goes on, the initial opening expenses, he had mentioned now, initial opening expenses, they'll be offset as the hotels are operationally on the operational level profitable. So they will cover the opening expenses and then will just contribute to the profitability. Okay, continuing to read. Secondly, the new hotel openings that also has a burden of cost on us, staff, marketing, and other expenses which are there, which have been in quarter two. We have seen this costs, they are booked in this quarter. Moving on, another reason. Third, also, sir, is basically we had in general a weak quarter two in terms of revenue. So even today, if my expenses would have been managed, had I been able to have better revenue. Unfortunately, this year, why was there a drop in revenue? Now, one reason and what will be covered. The another major reason, the drop in monsoon has affected us primarily in Mumbai, as a large part of our business coming from Mumbai. Particularly affected us in Mumbai, Maharashtra, Pune, yeah, and Mumbai. Okay, so in these places, because of the rains, Mumbai, Maharashtra, Pune were affected massively. A lot of the revenue comes from these places. So it's so much rain, people are not coming. Their reason, their explanation, maybe Pune, Mumbai, that's a beach, it's nice and all. It's rainy, so why go to the beach? It's rainy. But there's a drop in revenue because of the monsoons, but the expenses, see, expenses are not elastic. The staff, the food, the electricity, all of that has to be paid. So that was the reason why the quarter was bad. Some of the reasons. One, Revenue did bad because the Mumbai, Pune, the Shimla, and Manali all were affected by monsoons. But in these hotels which are affected by monsoons, people are not able to come. So more of the rooms are remaining unoccupied. Occupancy rate just falls massively. Average room rate is stable. It's holding on. It's holding on. Now, revenue is not coming, but expenses, they're getting booked. You have to maintain the hotels. You have to pay the staff. You have to pay rent because many of the hotels are leased. Expenses are booked, revenue not coming. Obviously, EBITDA margins fall to the roof. Profits, they are going into losses. Moreover, in addition to this, as a summary, many of the new hotels which they were opening, there were a lot of opening and upfront expenses and investment which have been booked in this quarter, that is quarter two fiscal year 2026, which further contributed to a drop in profitability. Now, you see the star is for the rebound. In quarter three, again, I like to mention, okay, it looks excellent in terms of performance. So right now we are in quarter three of fiscal year 2026. So quarter three, it looks excellent according to management, and I think we will have a good quarter three. So yeah, they think it will have a good quarter three. Then one more other reason basically is we have a drop in our Orchid Pune, very important, particularly which is a subsidiary of ours, OHPPL. As we speak, renovation work has been going on in this quarter and it is ending now. On 15th of November, the first phase will get over, and the one part of the first phase, will get over in the first week of December. So that is one small hall. Sorry, it's not small. It is 7,000 square feet hall that will come by the first week of December. But rest all the spaces will be completed by 15th November. So Orchid Pune, in addition to the rains, one more reason for the bad performance is Orchid Pune had a renovation going on. They have this square feet hall now, a new 7,000 square feet hall where you can hold weddings, you can hold functions. But now that is going under renovation, and people come to Orchid Pune to hold weddings, to hold functions. So if the if the hall is being renovated, you can't hold functions, so people won't come because the reason they're coming is because they want to hold a function. So yes, finally the reservation or most of the work done by 15 November, some work first week of December. So finally, Orchid Pune, it's expected to rebound massively. Expected to rebound, expected people will come again and hold events, and that will further contribute to profitability that is expected. Then rebound start. Okay, in fact, one more thing I can mention to you why quarter three will be better than last time. Better than last time, better than quarter three of last year. Apart from the improved performance or that the wedding season, all that starts, the main one other thing is that last year hotels which did not perform very well because they were new, like Jamnagar, like Sambhajinagar, IRA by Orchid, IRA by Orchid Sambhajinagar because of the expenses booked. As I mentioned before, on a performance basis, they did good. So last year, a lot of these newly mentioned hotels, they were not doing good on an accounting basis, financial basis. Why? Operationally, they were profitable, but again, the expenses were booked. See, expenses were booked, so they looked like losses, but now they're doing good. They're going to cover all the opening expenses and contribute to profitability. So this one, yeah, they expected to good. Now, question has been asked by an investor. In future strategy, you have mentioned in the slide KHIL 3.0, Kamath Hotels 3.0, where you have projected revenues of say 400 crores for fiscal year 2026. But looking at the first half, will you revise your guidance downwards or the 400 crores remains intact? In fiscal year 25, they did around 370 crores in revenue. The target for revenue in fiscal year 2026 is 400 crores. So investor is asking, performance was not good in quarter two or quarter one. Will they maintain this target? Now, very good. No, sir, based on what we see, based on what we have in hand, and based on what we see, we will stick to a guidance of 400 crores. So they still believe they can achieve 400 crores of revenue in fiscal year 2026 despite the weak performance. Hold on. Yes. Another statement. We are very confident and I'm very sure of quarter three and quarter four achieving a target of 400 crores like we've already given. So as summary, quarter three, quarter four, rebound, recovery, very good quarters are expected. Excellent quarters. The word excellent has been used for quarter three, and 400 crores is the guidance. So you can maybe calculate how much could be the revenues in quarter three. Now we move back and let us take a look at this target once more. Okay, this KHIL 3.0, Kamath Hotels 3.0 future strategy. So in fiscal year 2025, 7 states. They covered 7 states. In fiscal year 2026, 12 states. Number of properties increasing from 1926. Average room rate increasing from 6,500 to 7,500. Okay, let us see if they can achieve this. Revenues 4,000 crores. Okay, in millions of rupees. So debt they're going to reduce from 105 crores or 1,050 million rupees to 500 million rupees. So, like halving the debt and number of keys, which I think is the number of rooms going from 1,800 in fiscal year 25, 2,500 in fiscal year 2026. So, Kamath Hotels, horrible results. They gave a lot of reasons, revenue, monsoons basically, and one renovation at a hall going on. Mumbai, Pune affected a lot. Expenses, of course, still there, but they're expecting that on revenue basis, on revenue basis, they will achieve 400 crores. They did mention in a line, I can't find it right now in the con call, that their profitability may be hit a bit because, of course, that quarter two loss that they had, that cannot go away. That is still there. So, according to calculations, whatever profitability people are expecting, yeah, the quarter two loss has to be, you know, it will exist. It will exist. But yes, they're expecting more revenue, better average room rate, way better, debt to decrease by like to half, and more rooms, more properties, more state reach. That is it. That is it. Bye.